take a look at the performance of tech stocks, which have soared over the past 2 years while President Biden has been in office. Over the past 4 years, I should say. Energy has actually outperformed, though, up 109% during that period of time. Pippa Stevens here to break down what it means, Pippa.
Yeah, so it's pretty surprising because oil and gas stocks actually did not do well under Trump, and then they were the top sector under President Biden, more than doubling. And so, it is a reminder that whoever is in the White House does not actually control the price of oil or the drilling activities. But it is still notable, and there are a few key reasons why energy stocks have done so well under President Biden. The first is that they were coming off a very low base. Remember, back in April of 2020, WTI turned negative for the first time on record. And then we started to see an uptick in growth coming out of the pandemic, which did boost demand for oil and petroleum products. Then, as you see there, we also had Russia's invasion of Ukraine back in February of 2022, which sent oil prices above $130. And then together with the war in the Middle East, it has kind of highlighted the importance of energy security. And then finally, these companies have really just created new business models. As Rob Thummel over at Tortoise told me, they've now focused on returning money to shareholders, paying down debt, not growing at all costs. And so their dividends and their buybacks are starting to look very attractive. Now, the top performers, we have a full screen here, is actually Targa Resources. In the last 4 years, it's up 462%. Wow. Also Marathon Oil and Marathon Petroleum as well. There you see it. Also Diamondback, ExxonMobil, some other names more than doubling.
How have they done it when oil prices for the past,
year
plus,
yeah,
have been flat to down?
Yeah, well, they've been smart about where they're growing, and so they're focused on their lowest cost production. They've also done a lot of things. These companies are so high tech in terms of their subsurface knowledge and figuring out how to get the most oil out of the ground for the lowest amount spent. Think about, Exxon's acquisition of Pioneer Natural Resources. With all of that continuous acreage, they can now drill 4-mile laterals. And so you're spending a lot less upfront. And also, they've figured out kind of what is the sweet spot in terms of where's our break even, where can we support our dividends and buybacks. And because they have so much free cash flow now, they can cover that. And so it's a whole new value proposition.
But people have said to the energy industry, be careful what you wish for. You might want a president who has more liberal drilling rules, for instance. But if the price of the commodity falls as a result and the stocks are down as well, this goes back to the shale boom. It was tremendous for kind of the existence of the crude commodity, but very, very bad for the companies.
Yeah,
themselves.
And I think, Exxon's Darren Woods told us earlier this week that he's not sure how drill, baby, drill translates into policy.
Right, exactly. Or into stock price performance. Yeah.